My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to save you some money. My job is not just to entertain, but to educate, teach. Put this one in context. Call me, 1-800-743-CNBC. Tweet me at Jim Cramer. Yesterday, we had this bizarro session where everything went up, both the Biden stocks and the Trump stocks. Obviously, that was unsustainable. We knew one of these guys had to lose. But today, we learned that nearly everyone loses when the president acts the stimulus negotiations until after the election, slamming the averages. Dow sinking 376 points, S&P losing 1.40%, NASDAQ falling 1.57%.
The house of pain.
It's a crushing disappointment for anyone who's lost their job or might be on the verge of losing their job because small businesses are running out of money. And not just small businesses, frankly. The airlines felt like expired milk without a bailout. And you got to wonder what will happen to the 14 million odd people and their families who work in the hospitality industry that is just, let's just say, inhospitable. Plus, there were plenty of investors hoping to surf the wave of new money from Washington. I don't worry about them. I don't care about them. The market thrives in liquidity. The president just pulled the plug on an ocean of cash. Again, I don't care about them. I care about the small and medium-sized businesses and the workers that are now going to be laid off. Speaker Pelosi and Treasury Secretary Mnuchin seem like they're making a lot of progress, right? Getting a lot of phone calls, getting closer to a deal, at least until President Trump arrived back in the White House from Walter Reed Medical Center. Earlier today, Fed Chief Jay Powell, a reasonable man, practically begged elected leaders for more stimulus, something that Speaker Pelosi echoed soon after the president stopped the negotiations. But it was too late, as Trump tweeted that he was adamant he could put through a better bill after the election when he presumes he will have a stronger hand. All right, so what's really going on here? I mean, that's the rhetoric. We all heard the rhetoric, right? I mean, it's like the political stuff. I think the president's taking a calculated risk, betting the economy is actually stronger than most of us believe. He thinks we've got a V-shaped recovery, and he touts it every chance he gets, including a couple of tweets today. Now, that's a view that is actually shared by many Republicans in the Senate. That's why I told you the Senate was never on board. If you can't come up with a compromise 4 weeks before people go to the polls, I don't know if it'll be easier to do a month from now, but let's assume that's a real possibility. Can small business owners actually hold on until after the election? Can the airlines make it despite their cascading losses? How about the hotels that are in arrears, or the renters who can't afford to pay their landlords, who can't afford to pay the banks, or the state governments that are bleeding from their eyeballs because of the pandemic? Personally, I think a good stimulus bill today is better than a great stimulus bill a month from now, although I say this as someone who just had to close my restaurant because it's impossible to make money in this environment. So what's the point? So why is the president much less worried than the chairman of the Federal Reserve? Well, the president's aides are conscious that many areas of the economy are red hot right now, and they'll stay hot regardless of what the government does. Plus, don't forget, the parts of the economy that need help are small businesses, and they don't trade publicly, so their weakness rarely filters through to the stock market, which is why the president could tout in his tweets that we're at record highs, although we are a little off, particularly after today. Now, how about the parts of the economy that are en fuego? Well, these are the ones that the president's right. They don't need help. First, housing. As long as we have to live with the pandemic, there's going to be an exodus of people moving from the cities to the suburbs. And those people need homes. As Diana Look said today, the market is red hot. It doesn't hurt that mortgage rates are very low. If you still have your job and you can work from home, you can buy a nice place in the suburbs and fill it with great furniture and appliances and outdoor heaters and fire pits so you don't give each other something that now is being considered like a bad flu, because let's say Captain Trips is a bad flu. But you're going to be stuck all day there, so why not, regardless of the cold, build out something outside your house? That's what a lot of people are doing. Now, I like the housing and housing-related stocks here, especially the stocks of companies that sell their merchandise at Lowe's, at Home Depot. The only thing that can stop the housing bull market and uptick in interest rates or major downtick in employment. But for the moment, neither of those seem likely. I'm going to stress once again so people understand that there's something in here, you know, besides an undershirt. Like, if you had like a heart, you would know that you only get to take advantage of the housing bull market if you have a job. And if you don't, you can't get the loan. So I'm conscious of that, okay? I'm not like, wow, what a bozo, heartless guy Cramer's. Second, and I lived in my car, believe me, I would have loved the loan. Second, Home Depot, Lowe's, they benefit from the collapse of the stimulus talks because they benefit. because their smaller independent competitors are unlikely to survive without a bailout. So they're now donors. See, these guys take advantage because they're donating. These other smaller guys who needed the stimulus are donating business to them. Same goes for Target, Walmart, Costco. You can't get stronger than these guys now that so much of the competition will to fold. The death of mom-and-pop retailers may be bad for the country, but it's phenomenal for these stocks. Just like we said, technology advanced like 10 years because of this. Well, you know what? The collapse of the small business advanced like 10 years. I say with a smirk. Also, a huge win for the dollar stores because no stimulus means more people have to trade down to the cheapest stores to make ends meet. Those are the ones that don't have the jobs. Third is autos. Just like housing, this is all about the exodus of the suburbs. Did you see Group 1 Automotive today? I did. That stock worth 16%. Sales were so strong. Just like Carvana, just like AutoNation, Lithium Motors, CarMax. These mostly used car retailers are exactly what you need if you move away from the city and you're afraid to carpool or take the dreaded mass transit. You want to stretch the field? Buy some Ford, which is the beginning of a nascent turnaround. Fourth, vast swaths of the stay-at-home economy are still working. If you have enough money, guess what? Well, you're back on your Peloton exercise machine. How's the lines for that one? You're worried about COVID, and most people still are, by the way. Then you're using the internet for most of your shopping. So I think today's pullback gives you a terrific opportunity to buy the stock of Amazon right ahead of Amazon Prime Day next week. Yeah, I mean, the stock got clubbed today. There's a reason both FedEx and United Parcel held up just today. Parcels are an unstoppable force in the era of a really heavy flu. At least if you have Regeneron's custom cocktail and not a margarita or a vodka martini. Those are name me three cocktails of which one helps you. Oh, and don't forget, the restaurant chains that have pivoted to takeout and delivery, like Yum Brands, Dart, and Chipotle, they kill it. With no stimulus to keep smaller restaurants afloat, these chains will be the last man standing in the industry. Not great for my diet, but very good for their stocks. All that said, I don't want to be too glib here. We could really use that stimulus package. Without one, numbers will have to come down for a whole host of companies, but not technology. Not technology because most tech supports the enterprise, not the consumer. And the enterprise, as I've said, is doing quite well. You can watch those sink a bit, the tech stocks, and then pick up some weakness because what happens is they go down. Tomorrow, everybody's scared to buy them. And by 3 o'clock tomorrow, they'll be okay. You start picking, and then the next day, they're fine. Some people will argue that the lack of stimulus means we're headed for a recession. I don't think that's true as long as we get some kind of bailout by the end of the year. But if you think we are headed for a recession, I'll give you another menu. It's straightforward. You buy PepsiCo, ConAgra, just for a great quarter. We had them on TV, remember? Campbell Soup, it's too cheap to know. We had them on, too. Bristol-Myers, we had them on just the other day. It's pretty good. It was yesterday. J&J, the aforementioned Regeneron, when it comes to the compelling recession-resistant or recession-proof stocks, don't outthink it. There they are. We're living in a tale of two cities economy. The part that's hurting doesn't really matter to the stock market. The part that's working is mostly publicly traded companies. We have a V-shaped recovery in those companies, V-shaped recovery in housing, U-shaped recovery in autos. Some of the largest retailers never even experienced a downturn. Think Walmart, Amazon, Costco, Target, Home Depot, and Lowe's. No downturn. In fact, they have enjoyed an essential upturn, replete with earnings that handily beat the estimates because they were essential. And all the little guys, not essential. All of these work, regardless of what happens in Washington. Same goes for Cramer COVID-19 remote work stocks. They all did well today. And the food and drug plays that I mentioned because the pandemic's flaring up again. The president may have ripped his mask off yesterday, but most of us will be putting them on extra tight this fall. The bottom line, when it comes to the rest of the economy, what can I say? You can't buy stocks in small, medium-sized businesses that are about to go under here. That pain is real, even if it's not reflected by the stock market, because you can't invest in your local convenience store or your watering hole or a clothing shop or workout studio or optician or brasserie or diner or anything else that really needed the relief, because that's no longer in the cards.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.